All of these banks understand exactly what they're doing with inflation, and they understand exactly what gold is. But in order to kill that bird, along with all of the other birds relating to this new settlement status that the BIS is behind the most powerful bank in the world, it's setting the stage for a massive gold revaluation, which will not only allow you, as you've said many times, to survive, but also to potentially thrive. If I'm right, those few people who are holding gold will thrive. And when we talk about silver, look, let's not ignore silver. We'll talk more about it, but it is being wickedly accumulated by countries like India. I wouldn't forget about silver. It is not a tier one like gold, but it is also something that I believe should be characterized as strategic. And we're on the cusp of some very big things. And I think gold and silver and the dollar, those three things that we focus on, will have a profoundly different view. All three will in the coming months ahead.
In today's news recap, your silver to the moon. Continuing inflation may be crippling consumers, but it is doing wonders for giving silver back its luster, with the precious metal gaining over 34% in the past 6 months. In late May, silver hit its highest point in 12 years. Maria Smirnova, Senior Portfolio Manager and Chief Investment Officer for Sprott Asset Management, says silver has been playing catch up to gold's rally, while gold has been running for longer. In terms of percentage gains, the safe haven metal has only advanced 17.6% in 2024, to a peak of $2,440 in May. Smirnova says both metals have been buoyed by the prospect of easing monetary policy in the U.S., rising geopolitical turmoil in the Middle East, and central bank buying, particularly from China. Silver faced several headwinds in 2023, most notably rising interest rates and slower economic growth in both the U.S. and China. She says, while, the physical silver market was robust in 2023, Western investment demand was tepid, with silver bullion ETFs shedding approximately 50 million ounces during the year and representing more than 6% of holdings. Looking ahead, we expect silver prices to continue to improve, driven by low interest rates, more robust physical ETF purchases, and increased industrial demand. The Silver Institute sees silver demand rising 2% this year because of its dual purpose as a key element in the clean energy transition. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. And check our description for more info and full vid credits. Enjoy the episode.
You're the largest oil producer in the world. Sign on as a full participant is a very big deal. Project Enbridge does not utilize dollars. Dollars do not work on Project Enbridge. And so what it does is it eliminates the ability, first and foremost, for the United States and the West to impose sanctions, number one. And if you read the unit information, they talk about it being redeemable in gold for these countries. It is backed by something substantial. And when you realize that gold has outperformed the Treasury, the 10-year Treasury over the last 25 years by almost double with no counterparty liability, it incentivizes countries. Part of the petrodollar deal was to sell not only in dollars, but to take any of the excess reserves and put them into U.S. Treasuries, which has been the key to, bolstering the bond market, keeping interest rates low and supporting our dollar and our system. If you all of a sudden have countries that not only aren't using the dollar to settle in, because the whole concept of the unit and the Enbridge is that these countries can remain autonomous, have their own monetary policy, and trade in their local currencies, but settle in a common settlement currency that is backed by 40% gold and 60% in the currencies that are in the BRICS plus countries. So it incentivizes the stockpiling of gold, which we've seen. The BIS is part of the Project Enbridge. They're the ones who reclassified gold. All of these things seem to be coming together. What it really does is, for the first time in 50 years, gives a real competitor to the system, and reason to not stockpile treasuries, and reason to not stockpile dollars. In other words, the settlement or the transaction would be done in local currencies. The settlement is done in a common settlement currency. Both chip away at the hegemony of the dollar. And I think it remonetizes gold throughout the world in terms of its value and puts a question mark on the treasury. So yeah, it is ultimately something that would have a negative impact, one would think, ultimately, on the dollar. But again, when you see Saudi Arabia become a full participant in this program, I think it signals that the end of a system that you could argue is past its expiration, and the beginning of a new system, one that will be all about transparency, all about, blockchain, and commodities. I mean, this fits right into what Zoltan Pozsar says. So again, people who expect instant gratification and immediate results will dismiss this and look past it. And in fact, we've seen that. But to me, it's just more and more and more of the little by little by little by little chipping away. And I would argue this alone, in and of itself, ends the dollar hegemony, not the supremacy, which still represents 60% or more of all of the reserves. And, the supremacy is still there. But yeah, you could argue the hegemony is over. And with each passing day and with each, out of this meeting in Novigrad last week, they talked about 59 countries want to join. And, how big will this union be? And will all of them start trading on Enbridge? And will all of them start accepting and trading the unit? I guess we'll see. There's a special meeting in September to discuss the unit in China. And if it all goes well, they'll roll it out in October. These are all ifs, but you can see that we are hedging and moving and edging in this direction. So that will take time, to your point, but you could argue it's a very long fuse and it's been lit. How long before it hits the firecracker? Don't know, but it's not good for the dollar. It's not good at all for the dollar long term, because you now have legitimate alternatives, if this grows, that have not been around for the better part of over 50 years. And I think it will have great adoption as a result of it being free from the ability of the Western sanctions. And that's really, I think, what the key is here. Not only will it be faster settlement and less costly, instead of having these currencies all have to convert into dollars through commercial banks to the central banks and back into the other currencies. It's costly, it's time consuming, but more relevant, it also will greatly curtail the ability of these countries to sanction and weaponize the system the way that they have. So that in and of itself makes it compelling to a lot of countries, and ultimately to the detriment, if you will, of the status quo. So I guess we'll see. Only time will tell. But not good for the status quo, not good for recency bias, and ultimately could be the first chapter of a new system.
In today's news recap, silver prices hit 3-week high on optimism over Fed rate cut, up 6% in July. Silver prices extended their winning streak for the 8th consecutive trading session today to hit a 3-week high of 92,550 per kilo on the MCX, as softer than expected U.S. economic data reinforced expectations for Federal Reserve interest rate cuts. Prices have rallied 6% in July so far, on track for the biggest weekly gain since mid-May. Markets are anticipating a rate cut from the Fed in September due to waning inflation, a slump in the U.S. job market, and a cooling economy. Traders are currently pricing in a 73% chance of a Fed rate cut in September, according to the CME FedWatch tool. In periods of falling interest rates, gold prices typically ascend as investors find bullion more attractive compared to income-paying assets such as bonds. The U.S. PCE index showed that inflation in May slowed to its lowest annual rate in over 3 years. Core PCE prices increased by only 0.1% from the previous month, the smallest increase in 6 months, while the annual rate eased to 2.6%, the lowest since early 2021. Additionally, U.S. job openings rose to 8.14 million in May, and first-time applications for U.S. unemployment benefits increased last week, with the number of people on jobless rolls rising to a new high by the end of June. Now we'll show you more clips, but remember to like and subscribe if you like our recaps.
Times over the last few months, it's now becoming a reality. And it's you need to understand, you need to listen to the verbiage here in the statement, because it's the exact same thing that they understand with the commodity markets. And this is why we're seeing so many deliveries. And I'll answer this question in a moment, but just like we're seeing all of the gold heading to Hong Kong. Remember, the CME Group created a contract in 2015 that allows for exchange for physical to be delivered to BRICS Hong Kong, which is a COMEX vault, and they only keep taking kilo gold bars. Ironically, no, it's not, because the Shanghai Gold Exchange trades in kilo bars. The COMEX trades in 100-ounce bars, although their mini contract is kilo bars. So when you see, 500+ million in gold delivered to BRICS Hong Kong in an exchange for physical, that's being trucked over to the Shanghai Gold Exchange. They are using the suppression of the Western market against us and standing for delivery. We just saw the other day another huge delivery coming out of the June contract for gold. It was 30,000 gold contracts were delivered off of COMEX in the June contract, 30,000 times 100 ounces. We continue to see drawdowns in the exchanges because the world understands this is how they win the game. The countries that are standing for delivery now never did. It is the standing for delivery, the coordination, sophistication, wealth, being cunning enough and understanding enough to understand this is how you beat the West, by standing for delivery in these exchanges. Well, the same thing would be true in respect with the BRICS Grain Exchange. And I'm going to read something to you here so people understand, they get what's happening, and they're using this leverage against us. They say the BRICS Grain Exchange is likely to change the face of the world grain market tremendously. And this is according to the Russian officials. The existing global grain market infrastructure was formed following the Second World War, when U.S. wheat and corn exports dominated the market, the ministry said. Although U.S. exports no longer play the role they used to, global prices are primarily determined by the Chicago Commodity Exchange. Moscow seeks to move away from trading grain for U.S. dollars in favor of the national currencies of the BRICS member states. The ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of the agricultural commodities critical for their food security. The BRICS Commodity Exchange will solve this problem. But this is the point here. The same thing will be true. Look, they now have a commodity exchange, which would be for things like corn and soybean and wheat. Well, what's Brazil doing right now? They're the second largest exporter of corn in the world. They're selling corn and soybeans to China for yuan over the project Bridge, sidestepping SWIFT, and probably sending that yuan back and converting it into gold on the Shanghai Gold Exchange. Probably those same kilo bars that came off the COMEX. So they're doing that. But what did China do? They bought the LME, the London Metals Exchange, the base metals, right? We've talked about how all of the countries joining the BRICS or the Shanghai Cooperation Organization or the Belt Road Initiative are massively rich in commodities, right? So they're buying the LME, which is base metals. They're draining the exchange in precious metals. And by the way, the LME, which the Chinese own, even though the exchange is in the UK, they're now building warehouses in China to warehouse the metals that are traded on the LME in China. So they're knee deep in base metals, copper, zinc, all that kind of stuff. They are building a grain exchange. There was a report that JP Morgan just came out with, said that they produce 70 to 80% of all the rare earth metals, but they refine 100% of all the rare earth metals. So you got that base covered. They came out and said that this new BRICS endeavor those countries that will be admitted in October will be very strategic in terms of their shipping lanes and their trade routes on top of their natural resources. Do you see how all of these ducks are being, put in a row, one after the other after the other? And what did Zoltan Pozar say? Oh, that's right.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.